how I draw my key support and resistance levels like a pro. How I draw my key support and resistance levels like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of this video is how I draw my key support and resistance levels like a pro. We are recording this video tutorial today because a TSTW 24 trader has asked a specific question about how I draw my key support and resistance level. This is an essential question, and therefore we are recording this video to share it with the general public so other traders also may learn from it. I would like to thank this trader for asking this essential question, all right? And I'm quite happy to tell you exactly how I draw my key support and resistance level, okay? So the number one, time frame that I use for my key levels is the yearly chart. In fact, if I am trading, if I cannot see the yearly chart, it's like I'm missing something very important. I want to see the yearly chart. So the trading software that I'm using here is TC2000, TC2000 Tango, Charlie, Digital 2, 2000, TC2000, all right? That's what I'm using here. So I can see the yearly chart, very, very important, all right? So if you are a new trader, you are not seeing the yearly chart, try to get, to see the yearly chart at least, all right? Very, very important. So because professionals are always checking, the key levels on the yearly chart. So on the yearly chart, what I do, I highlight the high, So anytime I see a candlestick bar like this, I will highlight the high. I will also highlight the low, all right? And I will always highlight the median line of that candlestick bar. So this is the high here, this is the low here, this is, the median line of this candlestick bar. So you can see that this is 2014. So at the beginning of each year, I do exactly the same thing. I want to know what is the high, the low, and the median line of the previous year. All right, so what I'm going to do now, so this is the high for 2014. I will color the median line into, what should we do now? Turquoise, that's the turquoise. I hope you can see on my chart. I will remove this one down. All right, and the low is the pink line, so this 2014. What I'm going to do now, so this is how I draw the key levels on the yearly chart, the high, the low, and the median line, all right? I don't do it only for one candlestick bar. I want, as the price is going down, you see here, this year, the euro dollar, the British pound, this is the British pound US dollar currency pair, As the price was going down, you see there are other yearly candlestick bar. I'm paying attention to their low, their high, and their low median line. So there was one here. So you see this one here. This was the low of one candlestick bar, the orange line here. And these levels are important key levels. In fact, if one is trading and one does not know where is the price, so from time to time, I'm coming to the yearly chart and see which key level are we approaching. So here we are now. You see where we are now for the pound dollar currency pair. If I draw a line there, we are here now. So, we are right here. So let's color that into which color I have now. Into black. That's the black line on the chart. You see, this is the black line here. So we are near the low of this candlestick bar on the yearly chart, and that low is at a 14813. So right now, 14853, 14813 is the key levels that the professional are watching, because that's where we are now. You see the price near that level. That's the low of 2013. So anytime the price near a key level, so when we were here, we are watching the low of 2014 because that's the key level that we must watch. And when the price was somewhere here near the orange line, we were watching the low of which year? 2011. Okay, so I'm watching the high, the low, and the median line. And very often, all right, you may see trading setup on or near those key level. Very, very important. All right. So if you have any question about the yearly chart, okay, you may ask me again and I'll come back to you. But that's how I do on the yearly chart. So beginning of the year, I highlight the previous year high, low, and the median line. Okay. But apart from that, as the price going down or going up, we are watching other key level, which are the high, the low, and the median line of the previous year. It can be any candle. Okay, here you see. So if you pay attention to, let's use the orange one here. Let's pay attention to the orange line. I'm going to go now to the 2 days chart. All right. So that's the orange line here. That's the key level that we have seen on the yearly chart. Let's see the reaction of the price. So we know now, because we have drawn it from the yearly chart, we know that it's a very, very important key level that professional watching. Okay. So you can see that the price did below that level here, and I'll retest it here on the 2 days chart. Touch it, okay? So here we will say break below, retest. You can use the top-down trading method to look for opportunity to sell here. It went down. You see, it went above it again and found a support near that level, went back up. But you have to see the reaction of the price here. Here again, it changed the direction here. There was a support here. The price found a support here, went back up. Here it is. He found a support again near the same orange line. You can see the reaction of the price near that orange line. The price was also oscillating. You can see there was a bit of consolidation in this zone. But around that orange line, because it's a key level. You see here, again here. So this is what we are looking for. Okay? This is what we are looking for on the yearly chart. Okay? Let's go back again to the yearly chart. We are looking at the pound-dollar currency pair, and I have highlighted the highs, the low, and the median line of 2014. Okay, so the red line, the turquoise line, and the pink line. So this year, 2015, the price came near the pink line. Once again, let's go to the 2 days chart and see the reaction of the price around the pink line. That's where. So here it is. That's the pink line this year, 2015. So this is the beginning of 2015. Let's put a vertical line there. Okay. So here it is. Price went down beginning of 2015 and went back up to retest. So it did below the pink line and went back to retest. Okay, that's key level. Professional sold it here on the edge. Price went down, blah, blah, blah. All right, and return back again to the pink line. Trader sold it again. It went down, but this time it displayed a higher low. All right, so you see your price went above it again. So the point I want to make to you that the best trading setup will appear on or near the key level, and we will use a top-down trading method. If you are using the TSTW 24, all right, we see a trading setup prior retesting a key level or on or near key level. We go to the first best time frame, monitoring, okay, the reaction of the price, okay? So this is about using the price itself to draw the key level. So what I've done on the yearly chart is very, very important. This is the number one, okay, time frame that one can find, okay, robust, okay, key levels, support and resistance level. So this is about using the price alone. We can apply the same method on the monthly chart, on the quarterly chart, and also on the weekly chart. Paying attention to the price, the high, the low, and the median line, we can apply the same strategy on the quarterly charts, on the monthly chart, and also on the weekly chart, okay? Now I'm going to go now to the monthly chart. I also draw my key levels on a monthly chart. But on a monthly chart, I use different approach, okay? Pay attention very carefully. What I do on a monthly chart is this. I'm asking a very simple question, all right? What are the major turning points? Okay, so I want to highlight the major turning point on the monthly charts. Okay, so there's one here. The price did change direction here. This is a major turning point on the monthly chart, and there's another major turning point. Okay, here again another major turning point, and these are another major turning point. Okay, and here we have another major turning point. You can see there were other one here, but I don't want to put too many things on my chart. So they change the direction here, change the direction here. Here also change the direction here. But I don't want to put too much stuff on my chart. Okay, this is another major turning point on the monthly charts. Paying attention to the price action alone. Yet again, it changed the direction here. So I want to draw support and resistance level or key levels around the major turning point on the monthly chart. It makes sense? So that's what I do on the monthly chart, paying attention to the price itself. So you can see that here the price went a bit too far, all the way down. You can pay attention to the far end of the turning point. You see here this candle all the way here. But what I try to do is, you see where you see the closing price level. I pay more attention to the closing price level, like this. Okay? But I'm aware of each level, but I just select this one like this. But I'm also paying attention to the other bit. But the most important one is, okay, where the price, my telephone is ringing here. I'm not going to, hold on please. All right, let's continue. So what I was saying that, thank you. So we pay attention to the major turning point on the monthly chart. Here it is. You see here, this level here. All I do, you see the price went down more. Here you see the tail, but I will only concentrate, okay, on the closing price here. But I'm aware of these key levels. It's not that I'm disregarding them, but I give more authority to the closing price level at a major turning point on the monthly charts. Here again, you see here the price, you see there were the shadow here on the top. All I do, I just move it to the closing price section. Here it is, where we have more consensus right there, and I'm paying attention to that level also. So you can see that if you have done that, so you see the price went up here, we're all the way up here, blah, blah, blah. But as I'm paying attention to the red line, which is near the closing price, as the price return back that you see here, boom, on the edge, exactly on the dot, it hit it that level. So what is happening here? Why are we paying attention to this major turning point on the monthly chart? It's just because the hedge fund, the banks, the big institutions spend, okay, a lot of time to hide their footprints, okay? But the price does not hide anything. Though they spend a lot of money to hide what they are doing, the price does not hide what they are doing. So we see clearly that some people were buying here. So the price was going down. So they do not buy at any price, and they buy for different reasons, okay, fundamental reason. So they bought it here. So this level here for the pound US dollar currency pair, the level of 14279, is a very important level because the smart money has exposed the activity in this zone. Again, they have done it here. So all we are waiting for, if the price on or near one of these key levels, we are monitoring their reaction because they are likely to buy again or to sell again in the same zone. As you can see, they sold it here before, and now again they sold it here. And here the price went up above it, and now they sold it again in the same zone, though it went up a little bit above it. Here you can see, okay, here there was another one, okay, the green line here, they bought it here. Now, the price returned back to the same zone. We want to see, because they bought it, we are not buying before the big market players. We wait for them to buy, and we will see on our lower time frame, bullish chart pattern if they are buying, or bullish, okay, market pattern, okay, around that zone. And when we see a bullish trading setup on or near this key level, Okay, we will use our trading system to trade it. Okay, very simple. We are not assuming anything, but we know that somebody has bought it here before, and we just wait and see whether they are going to buy again for the second time. We don't want to rush. We don't want to assume anything. We are very, very patient, okay? So this is how I draw the key levels on the monthly chart. So here again, you can see that there were this tail. So if I am here, I will just move it here on the monthly chart where the closing price. I don't ignore the tail, but I'm giving more consideration to the where we have more closing price right here. Okay, here again, you can see that the price, what the price did here, this is a bit tricky one. I find this one a bit tricky because the price, you can see, didn't make it really round. It just changed the direction here. Become a bit tricky. So here you can see that it's good one, not bad, because we have other key level that we can use. You see the red line that we have drawn here. So as I see it like this, I don't highlight this one anymore. The top one, I just leave it like that. I don't highlight it anymore because there were other footprint here, okay, which I've used, which was valid before. So it went straight. So you see, I will just wait. When you see it like this, it goes above it. Be very, very patient. And see, here it is. It changes direction and come back down. Okay? So this is how I draw my key levels on a monthly chart. So I use first the yearly chart, the key levels on the yearly chart. Key support and resistance level on the yearly chart are very, very important. Whenever you are trading, you can switch to the yearly chart and see where are we now, which key level are we approaching. Are we near a key level on the yearly chart? Because the professional know those key levels. So you are watching the low, the high, and the median line of candlestick bars on the yearly chart. Okay? Next thing, I also come to the monthly chart as I show you now, and I draw my key levels like this. Okay? All right? So where we are now, you can see we are here, a major turning point. This is the question I asked. So here we are, you see. We are here now, you see, near the closing price. So the pound-dollar currency pair is near a key level right now at 148.73. If you find a support, we will know. If it did below a final resistance, we will know. So for instance, we are here now. That's the black line. Let's go. Let's go. Here we are. This is on the 2-hour chart. So like this. My apology to traders. Bit of cough in here. Okay, so there is you see this channel here on the 2-hour chart. Draw the median line. So the current market pattern near that level is a bearish chart. Okay, so now the price breaking out of the bearish channel is sitting right there. I will prefer it like this. If it's sitting like this, I don't like it. I want the bulls. If it's going to be bullish, we want it to run a little bit away from it. All right, a little bit away from it, and then before pulling back. Okay, all right, pulling back. You see, watch this one here. All right, okay, that's what we will prefer. Sometimes you will see the price will go a little bit above it, and only to come back down. This is what we call turn around. Okay, you may turn around and come back below it and just continue to go down. Okay, all right. So this is what we are looking for. All right, this is a key level now. The black line, we know that this is a key level. Professionals know that. You see, it did below it. Why the price going back near this level? Because they know it's a key level. That's why they are watching this level. It return back there to retest it. So a key level that is a resistance before can be converted into support level. All right, a key level that was a support before can also be converted into a resistance level. So this was a support level before. The price D below that support level, trying to confirm whether that support level, okay, can be converted into resistance level. It failed to convert into resistance level at this point in time because the price went back above it. All right. So now we watch it. Very simple. If you go now to the 5-minute time frame or 3-minute time frame, whichever. Once again, anytime you see the channel that I draw on the 2-hour chart is still here. So now on the 5-minute time frame, again, anytime we change time frame, we draw channels. Okay, that's what we do. Anytime. Click, click, click. Okay, Anytime we change time frame, we just draw the channel, okay? Here we are, so we select this point, and this point here, we draw the first line, and we just choose one point here to make it parallel to the first line, okay? So now we are on a 5-minute time frame, okay? Now the price out of this channel, what do? We will project this channel in the direction of the price, okay? Very simple. On a 5-minute time frame, we can do that. Write this, okay? To determine a possible, okay, turning point, okay? Here we are. Okay, but the black line, that's the level that we are watching. So on the 5-minute time frame, the price, you see, blah, 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 is now back above it. Will it come back and find a support above it? The next thing you will do, you will check the time of the day, because now it's 35 minutes past 1 p.m. in London on the 23rd of December 2015. This is the time when we have major economy news. So if you check Forex Factories between 1 p.m., okay, up to 2 p.m. until New York is open, we have a lot of high impact economy news. So this is not a good time for day trading. So if you want to trade at this time, you will check the economy news, okay? Or in fact, if I want to trade this now, I may use a very tiny stop loss to trade it because I know it's a risky time to day trade. Or I will just wait until, okay, New York is open before, okay, I enter this trade, because another market is about to open. It's not a good time to rush into trade and being taken out before seeing the price doing exactly what you expected. Okay, so remember, I'm using the price action on the yearly chart, the high, the low, and the median line. On a monthly chart, I'm asking a specific question: what are the major turning points? And I'm drawing my line near the closing price. Okay, all right. So that's how I draw it on the monthly chart, okay? Now, I'm going to go back again I'll go this time to the weekly chart, okay? And what I will do, I'm going to remove all my lines, okay? I will remove all my lines because I want to talk about something else, okay? So remember, first time we were using the price action. The next thing that we can use also to highlight, I use to determine key levels, okay, is the market patterns. So market pattern, okay, rising channel, declining channel, horizontal channel. So you see the price here, you ask yourself, what is the current market pattern? I use that mainly on the weekly chart, market patterns, to determine key levels on the weekly chart, okay? So which market pattern do we have here? Okay, horizontal, yes or no? So I will just draw it like this, you see, almost like I showed you before on the monthly chart, closing price. So market pattern is horizontal. I want to draw a channel that contains, okay, at least 80% of the price action. So in that case, I'll draw it like this. Okay, so I have at least 80% of the price action. So this will be my primary market pattern. You can see one above it, but come back below it. And there was a bit of reaction here, so I can just put some line there also, okay, to highlight like I did on the monthly chart. But the market pattern that I'm watching now is the red channel because it's the horizontal channel on the weekly chart. So for me, as I'm using the market pattern to determine key level, I'm watching, okay, the top of the consolidation, the lower part of the consolidation, and also the median line of the consolidation. This strategy, I use it mostly on the weekly chart. So this is a key level, 16680. Okay, roughly, okay? You don't have to be exact size. You don't have to do it exactly like I'm doing it, okay? All right, just be aware of what has happened there, what has happened here before. Somebody sold it, okay? What has happened here before, somebody bought it, okay? That's what we want to know, okay? That's what we are looking for. Because orders has been placed there before, somebody sold it there and it worked, okay? Order has been placed and in another place, key support level, and it worked. So if they bought it there, there is a reason why they bought it there before. So if the price return back to the same zone, we see a bullish signal there, we want to take part into it, okay? We are just flowing with the market leaders, okay, to take advantage of what they are doing, okay? So this is how I draw it on a weekly chart, paying attention to the market patterns. So if I use another financial instrument, market patterns, sometimes we have a rising channel, okay? So you will see sometimes I draw I'm looking for, okay, so here, again, on the weekly chart, we are paying attention to what? The market pattern. So on the yearly chart, we are using the price action, okay? Monthly chart, we are using the price action. But on the weekly chart, I like to use the market patterns. So you see this point and this point, you see, okay, it's not exact size. All right, see here? So I draw it like this. This point and this point allow me to draw the first line, and I just choose one point here to make it parallel to the first one. So I'm looking for the price, 80% of the price to remain in the channel that I'm drawing. Roughly, okay? Something like that. So this trend line is a key level, okay? But we can put a level on it, but we can make trading decisions along this trend line. All right, so we can use the trend line apart from the normal support and resistance level. We can also use the trend lines, okay, from the weekly chart to trade. Okay, here it is. So I can project that channel again, talking about market geometry. Here it went out, can bring it down and draw another line. Okay, that is parallel to our first channel. Okay. All right, that's it. Okay, so we've on a weekly chart we do that. Okay, we do that. All right, we can do that. So we can go now from the weekly chart. I can go to the 15-minute chart and see. No, I can't see that those lines. Go to the 30-minute chart. Hopefully, I see one. No. Okay. Our chart. Can we see? Now we can't see any of them. 4-hour chart, probably yes. There's one here on the 4-hour chart because there's a correlation between the 4-hour chart and the weekly chart. Okay, see here we are on the 4-hour chart. This is one of our blue line from the weekly chart. Okay, all right. Okay, all right. This is about the market pattern. Okay, another thing that I use to draw my key levels, okay, which we talk about as a TST, okay, traders. You remember, all right? Trading idea part 1, part 2, part 3, part 4. All right, we go to the weekly chart, for instance. All right. I'm bringing about the pound-dollar currency pair, weekly chart. This is the weekly chart. So the previous week, this is the new week now. So we highlight what? The high, okay, the low of the previous week, and the median line. Very simple. This is we use this strategy also on a weekly chart. This is a trading idea part 1, part 2, part 3, part 4. Remember, we apply the same strategy. So a weekly candle is closed, a new week is beginning. We draw the high, the low, and the median line of the previous week. All right. So let's go now to the 15-minute chart and see whether there was some reaction on or near that level, beginning of this week. So today is the 23rd. Today is Wednesday, isn't it? Wednesday the 23rd. Wednesday the 23rd of December. So this week has started on the 21st, which is right here. I'll put a vertical line there. Okay. So we have this line at the beginning of the week like this. So here we are. You see, it's approaching a key level that we have drawn here. Some traders are taking profit here. Look how it went up to touch that the median line, pulled back to retest the low today. All right, pull back to retest the low of last week. Boom, it went back now to the high of last week. If this week is going to be bullish, all right, the price must go back above the previous high. This is the definition of an uptrend. That's why we want to know where is the high, the low, and the median line of last week. Okay, and find a support above the high of last week before we can have an extension. Price may continue to go above the high of last week. All right, but in our case, we don't want to violate the market pattern. Market pattern, market pattern. So you see now, okay, all right, excellent question. I told you that was a very essential question that you have asked. It sounds like a simple question, but it's a quite essential question, okay? The high, the low, and the median line. Just and monitor the reaction price. This was a beautiful buy. Beautiful. Look at that. When a bow, retest, dim. You can see yesterday, went below it, and then just turn around. This is what we call turn around. This is it just went around, and the crow just stay there. This turn around. Beautiful. Pull back, retest again, chew. Now we are at the top of, that's it. Some trader will take profit here. All right, so here we are on the 15-minute chart. The high, the low, and the median line on the weekly chart. How it was useful on a 50-minute chart, okay? All right, remember, we can connect the weekly chart, the 4-hour chart, and the 50-minute chart, okay? Top-down trading method, okay? It makes sense? We do exactly the same thing. Okay, I'm bringing now the pound-yen currency pair. We do exactly the same thing on the monthly chart. Now, we are sharing some confidential information with traders, or I hope a TSTW 24 trader will forgive me for that. All right. So we can talk about this one in public place. It's not bad, okay? Too much secret is not good. All right, okay, now. Okay, now where we are. So on a monthly chart, we do exactly the same thing. So the current month is this one here, the month of December 2015. So last month, so we'll do the high, okay, of last month, okay, the low of last month, okay, and also the median line of last month. Okay, these are the green line there, okay. Now the monthly chart, we can connect the monthly chart with the daily chart and the hourly chart. We are now on the daily chart, and this is the beginning of December. That's where I place the vertical line, and look, the price cross here, and then went up to retest somewhere near the median line of last month. This is the pound-yen currency pair, and traders sold it and down. This is what we call ABCD extension. Okay, price went beyond the equality between the A and the CD. All right. So if you don't know what is ABCD chart pattern extension, go to www.stochastic-madi.com. We are the first people to talk about ABCD. Okay, chart pattern extensions. Okay. All right. So here it is, the median line of last month. That's where professionals sold it. And even if you look carefully here, they sold it here before. They sold it here before. So they sold it here again. So it's approaching here. We will be seeing priority to bearish signal below the level of 18671. That's what we will tell traders, because they sold it here before. It's coming here, we say priority to bearish signal below. Coming down, the first target is this support level here, which is the low of last month. Hey, look at this candle here. This is gorgeous. We are now on a daily chart. Okay, here, this candle here. It did below and retest it and form a doji. All right, and a professional just sold it down now. Okay, so the extension is now completed. Okay, there's a high channel. You may start changing direction here. All right, if you apply, for instance, the video is getting a bit longer now. Okay, let's do it. Sometimes I like it went to the SEC. The 214 Fibonacci extension zone. That's where we are now. Okay. So as I'm talking about Fibonacci extension, we also use Fibonacci extensions to determine key level. That's what I'm doing now. You can see that the price from ABCD is an extension, and the price now at the 214 Fibonacci extension level is a key level. So remember everything that I've said. On the yearly chart, we use the high, the low, and the median line. On a monthly chart, we look for, okay, a high impact turning points, okay. On the weekly chart, we are paying attention to the market patterns, all right. And now we are talking about the trading idea part 1, part 2, highlighting the low, the median line, and the high on the weekly chart, monthly chart, quarterly charts, okay. Talking about trading idea part 1, part 2, part 3, okay, that we have talked about for TSTW traders. But apart from that, we also use, okay, Fibonacci extensions. All right, so here you are. You see, this is a key level again, a hidden. The Fibonacci extensions will reveal to us hidden key levels. Because sometimes you will look on the chart, you may not see any key level there at all, any past turning point, but the Fibonacci extensions will highlight possible reversal zone. But the mistake that we don't want to make is that we don't assume that the Fibonacci extension levels are magic level. They are not. They are just a level that a group of traders are watching. All right, these Fibonacci traders are watching those levels. So we want to know which level they are watching now. And there's one here, it's a 214. So Fibonacci extension, we have the 314 Fibonacci extension, the 214 Fibonacci extension, and the most powerful Fibonacci extension, the 138.2% Fibonacci extension. Now, I will not dwell on the 138.2% Fibonacci extension level. All I will say to traders, go to www.dayprotrader.com and make sure you watch everything, you read everything about the 138.2% Fibonacci extension level. That's it. So we use also Fibonacci extension level, okay, to determine key level. And the most powerful Fibonacci extension level that one can watch is the 138.2% Fibonacci extension level. You may ask me why. Then I will say to you, go to dayprotrader.com and click on 138.2% Fibonacci extension level. All right. So you can see that as the price start going down, forming the A, B, C, D, this is the 138.2%, the red line here, Fibonacci extension of the prior move. What is the prior move? It's this one. It went down from A to B and then rally up a bit before coming down. So if you apply the Fibonacci extension to this session, the 138.2% is the red line here. You can see that trader took profit here. We are on the daily chart now. They took profit. You see the tail here? They acknowledge this level. Powerful level. Beautiful. They know that they must take some profit here, okay? They know. So very powerful. If the bearish momentum should continue because the price is going down, the price must find a resistance below the 138.2% Fibonacci extension level. As I always say, I should charge traders for this information, but I give it for free, okay? All right? So Fibonacci extension, we can use it also. I use it also for my key level, okay? We're going to wrap it up soon. 37 minutes, sorry about that, but we want to talk about everything else. I'm going to go, so we can connect the monthly chart, daily chart, and the hourly chart. All right? So what we have done from the beginning, we highlight, okay, the high, the low, and the median line of the month of November 2015. And we can see that traders sold it near the median line of last month, okay? Trading idea, part 2, all right? Right there, okay? Powerful. Very simple. So because we want to buy, we want to know where can we buy? And we can only buy near those key levels where professionals are also waiting to buy, all right? To buy or sell, okay? Key, support, and resistance level. This is how I draw my key, support, and resistance level like a pro, okay? Another thing I want to mention to traders, I'm going to go now. I'm looking for the euro-dollar currency pair. I want to highlight something very quickly and wrap this video up before it becomes too long for traders. So here we are. You see this candle. I want to pay attention carefully to what I'm going to say now. I'm going to use again Fibonacci extension, and I want to highlight the 138.2% Fibonacci extension level, okay? So on a daily chart, okay? So this is the euro-dollar on a daily chart. And we have this candlestick. That's why we had yesterday, the 22nd of December 2015, because today is the 23rd, okay? So today, what we will do, which I have not talked about, okay, when we were talking about the TSTW 24, all right? So the price, you see, it went up, yes or no, okay? It went up, okay? We will apply Fibonacci extension to the range of this candle. The range is what? From the high, okay, to the low. That's the range of this candle. We are talking about this candle and this one. Are you following me? This one, okay? Yesterday candlestick bar, okay, okay, for the euro. So now, apology traders, we'll apply. Okay, hold on, please. Cancel that. Yes. The 138.2% is here for this the range of this candle. So this is the candle we highlight, the 138.2. That's the pink line here at the top here. 11. Is that correct? 11. 11010. 11010. All right. So the strategy is very simple. If the price will go up, okay, or if the price breaks above the high of yesterday, which it did not today, all right, if the price goes above the high of yesterday, all right, the first challenge for the bullish progression is the 138.2% Fibonacci extension level, this level here, 11010. But you can see that it's going down instead, okay? So when we draw the Fibonacci extension like this, the 138.2% is up here because the price went up yesterday. So this is the correct way to draw the Fibonacci extension. Now, because the price now you can see that is going down instead, what I recommend to traders is to place, okay, the Fibonacci extension upside down. Because normally, using TC2000, if the price goes up from A to B, we draw the Fibonacci extension from B to A. That's the normal way we draw it with the TC2000. Other software may do it in a different way. But now, because the price is not going up, we can use that Fibonacci 138.2%, okay? The pink line here, we can't use that because it's not useful to us, okay? But the price is going down. So we want to use our Fibonacci extension tool upside down, okay, in a wrong way. So we draw it now, instead of drawing it from B to A, which is the correct way, we will draw it from A to B. Now, some traders may find this a bit confusing. If you have any question, I may record another video to explain this to you. So now we are placing our Fibonacci extension upside down because that's not the correct way to place it. But we have a reason to do it because the price is going in the opposite direction. All we are trying to do is to apply the Fibonacci extension to the range of for the previous day, all right? So we can apply it the other way and also the other way. So the first time I apply it from B to A, now I'm applying it to the range again from, okay, A to B. Now my new 138.2% is right here. Now remember, what I've done now, I have used my Fibonacci extension upside down to the range of the previous day. So if it was going up, I will use the pink line here. Now it's going down, I will use this one now. It's a very important price level that I'm watching now. So what we will say to traders is this, that as the euro dollar is going down now, okay, we will give priority to bearish signal below the level of 10898, but be aware of the level of 10868, which is a hidden support level. For this bearish momentum to continue, the price must find a resistance below the orange line, break below, retest, and turn around. But you see the range of that's yesterday. So we are near the low of yesterday. That's the line here, okay? Let's color it into red and see, maybe you can see clearly. The red line, that's the low of the range of yesterday. That's where we are now. So if the price will continue to go down, it will find a resistance below that low, but be aware of a 138.2% Fibonacci extension that we have placed on our chart upside down, okay, in relation to the range of the candlestick bar of yesterday. Okay, ladies and gentlemen, I don't want the video to be too long. All right, we can use the high, the low, the opening price, the closing price, okay, of a higher time frame as a key level. Okay, so we can go to the quarterly chart, monthly chart, yearly chart, even daily chart, but I do not recommend that they look for key levels on a daily chart. Okay, prefer weekly chart, monthly chart, quarterly chart, yearly chart. Number one, yearly chart. Okay, the high, the low, and the median line. That's what I use myself. But be aware that traders also pay attention to the opening price and the closing price. But I prefer to use the high, the low, and the median line on the yearly chart. But generally, one can pay attention to the high, the low, the opening price, and the closing price also. Okay? On the monthly chart, I pay attention to the major turning point. And I'm drawing my line very close to the closing price zone. Okay? On the weekly chart, I give consideration to the market pattern, the rising channel, the trend lines, okay, of a rising channel, the upper trend line, the lower part of the trend line, okay, the lower part of the channel, and the median line of the channel. On the weekly chart, I use market pattern to determine a key, okay, support and resistance trend lines, if you accept that, okay? We also use trading idea, part 1, part 2, part 3, which consists of highlighting the high, the low, and the median line on the weekly chart, monthly chart, quarterly chart, and so on, okay? We can also use Fibonacci extensions to expose hidden support and resistance levels, okay? Key levels, okay, that are not visible on the charts. The most important thing one should understand in this, the purpose of knowing key levels, we are asking a very important question. What we are trying to do is to know what has happened here. So when we are looking at the euro dollar here on the daily chart, what has happened before? Somebody bought it here, price was going down, and this red line here became a support. Now we know the price come back near this level. Our first priority is to give priority to bullish signal above the red line and priority to bearish signal below. If you look here, somebody sold it here, and somebody sold it again here. Now, as it's coming here again to near this pink line, okay, we'll give priority to bearish signal below that key level. The key levels, when we see a key level, we are not just assuming that it's a support or resistance level. If you find a support above it, it's bullish. If you find a resistance below, it's a resistance. So do not use the key level as a magic level. Look for, if you go to the lower time frame, pay attention to the market pattern and a chart pattern that are formed on or near that level. All right, very important. You want to trade, use, okay, a setup. We can use a key level as a setup, right? Break below and retesting a key level. We can use this as a trading setup. Now we can switch to the first best time frame and then trade it, okay? Price breaks above a key level and retest it. All right, sometimes it takes time, we do blah, 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 okay? And then we trade it for them. Always, we want to combine the technical analysis with the fundamental. As I explained to you now, all right, the time of the day is very important, all right? What is going on, the market environment, so we do not, okay, place a trade too early and then being taken out before the price will do exactly what we are doing. We will also use the key levels to set the price target, okay, to set stop loss. Hiding our stop loss behind key level is also a good thing to do, all right? I hope I have answered all your questions. But if you have any more questions, please do not hesitate to contact me. But remember now, this is a Christmas. It may take me some time before I get back to you as we are preparing for Christmas. But, okay, all in all, I would like to thank you very much for asking this question. And, okay, as always, you can contact me anytime, okay, and I will get back to you. We wish you the very best in your trading. And until the next time, enjoy yourself and be very happy. This is about how I draw my key support and resistance levels like a pro. This video was recorded because a TSTW trader has asked a specific question. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Happy Christmas and Happy New Year to you all. Speak to you soon.